Mhm.
Okay, folks. I think we're a couple of minutes past the top of the hour. The recording light is on, so time to kick off our webinar here. I'm sure that we'll have more folks joining over the next few minutes. So the structure for today's webinar, I'm just going to give a quick overview for the topic. My name is Max Mizzi. I'm your host and panel moderator for today. Then we'll have quick introductions. I'll let you know who all of the folks are on the webinar today. And then James Phare from Neural Alpha will be giving a short presentation, and we'll have about 30 minutes dedicated to panel discussion on the topic. Okay, great. Without further ado, I'll kick off just with a brief introduction to myself. As I said, my name is Max Mizzi. I'm the host for this panel discussion. Also the head of strategy at Neural Alpha, where we've been working in the ESG sustainability space and embedding new and emerging technologies into that domain for many years. Um, so the reason for the webinar really is that there's an unprecedented level of interest and activity around applying AI across enterprises, but also to corporate sustainability and to sustainable finance. Every vendor seems to have AI products and features. Every enterprise has heads of AI and AI transformation programs. Um, but as we all know, for every game-changing innovation, there's always complexity. There's always a level of marketing jargon and blurb and over substance. And there's also usually a lot of missteps and challenges along the way. We've all heard statistics like 95% of internal AI pilots fail. And we're really here to talk a little bit more about what the application of AI looks like within this domain and share some do's and don'ts, a little bit of collective wisdom from across the group here with regards to how to implement and leverage AI, what you can do to mitigate risks, and where there is some proven value. I'll quickly introduce our speakers. I'll start with Lorraine Spradley Wilson, the founder and strategic advisor at Blue Horizon Economy, which is an advisory firm that guides companies from early stages all the way through to public trading on sustainability and innovation. Lorraine holds a number of other board and advisory roles with nonprofits and sustainability companies. Throughout her career, she's developed industry frameworks across different asset classes, built coalitions between investors, and achieved sustainability and innovation priorities by using those groups and frameworks. Most recently, Lorraine served as Chief Sustainability Officer at Novata, where she developed and scaled the private market sustainability data platform. And earlier in her career, she worked in financial services at companies like Bank of America, Merrill Lynch, and Goldman Sachs. Next up, Nawar Alsaadi, CEO of KanataQ. Nawar is the co-founder and CEO of KanataQ, a global sustainability solutions platform, as well as Kanata Advisors, an ESG fintech advisory firm. His sustainability career spans over 15 years, including roles such as ESG senior portfolio manager at Canada Post Pension Plan and chief impact officer at Scope 4 Capital. He's also served on the advisory board of several leading sustainability solution providers, and Noah holds an MBA from Boston University and is also the author of 5 books. Look those up online. Last but certainly not least, we have our very own James Phare, the CEO of Neural Alpha. James is the founder and CEO of Neural Alpha, a sustainability technology consultancy based in London and developer of the Responsible Capital AI platform. James has a track record in delivering innovative and impactful data solutions, particularly within the financial services industry, having worked with many large banks and asset managers. At Neural Alpha, James has led innovative award-winning projects across a variety of sustainability topics from deforestation to spatial finance. And prior to that, James was the head of data at Man Group, after starting his career at Thomson Reuters. So there we go. You know who the four of us are. Next on the agenda is the short presentation from James. So James, I'll hand the mic over to you. Let you prepare your slides and walk us through some of the key of applying AI to sustainability.
Great. Thanks, Max. And yeah, thanks everyone for attending today. Really looking forward to getting the discussion going and sharing a bit about some of the learnings that we've had over the last couple of years of working in this space. I'll just check. Can everyone see that? Should be showing the slide full screen. Everyone can hear me clearly. Right.
Audio and visuals are good, James. Thank you.
Brilliant. Thank you, Mission Control. Great. So yeah, very whistle stop tour. Hopefully 10 tips in terms of do's and don'ts that we've learned, sometimes the hard way with, working at the bleeding edge of AI, as some people like to call it, or large language models, as perhaps others, particularly technologists, might refer to the kind of latest wave of innovation that we're seeing. So yeah, starting off with a kind of a do. Now one of the things that we're very focused on is kind of terminology and scope, and what is possible within this space. And I think it's very easy to get kind of swept up in the hype that we're seeing in the industry. Lots of big blue chip companies going through big layoff cycles at the moment, tens of thousands of employees supposedly having entire jobs fully automated with AI. Equally, other kind of completely different views at the other end of the spectrum. Michael Burry, famous Big Short investment manager, today in the news with taking out short positions on Nvidia and Palantir, so being very bearish on the potential of AI. I guess where we sit is, we see AI as a tool that's somewhere in the middle. I guess that's a helpful tool. It can be game changing in many regards if used in the right way. So I guess there's a few helpful tips that we've kind of assembled along this journey. And one of them is around terminology. So AI is not a new thing. Particularly at Neural Alpha, we've been working with neural networks, as you can probably see in the name, that inspired the company back in 2016 when we got started, for a long time. And computer vision, natural language processing, none of these things are particularly new. What is new is this innovation with large language models, which is a very small part of the overall kind of AI ecosystem. And these are different things. So, large language models compared to Gen AI, compared to other components of the AI ecosystem, and they all have different roles to play. So I guess when we're going to be talking about AI today, we'll probably be mostly talking about large language models, given this tends to be the area that has seen the most adoption within sustainability use cases. So one of the other tips that we have is particularly around identifying what are those strong use cases, because as Max touched on, there's the majority of AI pilots still sadly fail, but we do see a lot of strong uptake within certain areas. And the areas that we've seen the most uptake in particular have been areas such as sustainability research and due diligence. Also screening is another very popular area where we see lots of users using our platform, and lots of other companies and people out there using tools. Also competitor sustainability benchmarking is another really strong use case. Similarly, assessing the alignment of companies to frameworks or standards, so very text heavy kind of documents. Again, really fantastic use case for large language models, which are, fundamentally about, making it, offering a human interface into these kind of natural language understanding capability. But there are also, a very large number of use cases where the jury is still out, but there's a lot of innovation that's happening. So particularly areas like XBRL auto tagging for, things like CSRD, and also AI report preparation. So automatic kind of writing and preparation of disclosures is another area where we see a lot of interest. Um, but perhaps more challenges in driving adoption there. Um, but either way, I guess one of the main learnings, which I think generally the industry has seen over the last couple of years, is that AI and particularly large language models are an incredibly powerful tool when applied in a very controlled, structured, tightly scoped manner. So particularly when applied within workflows in very tightly controlled steps. So one of the great analogies I think I heard from someone actually at New York Climate Week recently was, the way to think of AI is as a kind of junior analyst. So, someone that can be, has a lot of energy and enthusiasm, but without, tight guardrails can often kind of go off track and a bit astray. And I think that's a great analogy for what we're seeing at the moment. Yeah, so I'll try and pick up the pace a bit more. So we've got onto number two. So one of the don'ts that we've seen, and that's really kind of a caution around relying on standard out of the box AI platforms. So many of us I think are using ChatGPT, Perplexity, Gemini, other standard AI tools. And I think there's a lot that can be done with these tools in everyday workflows. But I think when it comes to particularly enterprise grade requirements in highly regulated industries, beyond the problem of just hallucinations, these kind of general purpose B2C tools are often not able to really cut the mustard, and partly that's down to all of the kind of peripheral functionality that's required to, manage things like your sources, your knowledge base, to be able to fine tune a model for the complex sustainability domain that we work in. And I think it's key to recognize that within sustainability, there are a lot of nuances and the language is very jargon intensive. So, just using tools like ChatGPT to analyze, conduct things like complex double materiality assessments based on the wisdom of the internet, I would say is probably unwise, but there are many other kind of non-enterprise requirements that these tools are very, very useful for. So top tip number three that we've come across is prompt engineering. So often I think there's a temptation for practitioners to dive into kind of more advanced ways of configuring models and adapting models. Actually, a big thing that we're seeing is a lot of the standard models are incredibly powerful when used in the right way. And particularly, I think there's a lot of value that can be extracted at very low cost through writing prompts essentially in the correct way and, getting some training there. And, this is a really great example, this diagram from, I think it was the chief product officer of OpenAI wrote this as an example for how to get the most out of the O1 model. But I think that the key takeaway here is really that to get the most out of large language models for the types of workflows that we're working in sustainability often means writing longer prompts than you used to. So probably if you're writing a very short prompt, a single sentence question, often that can be a useful thing for just doing quick kind of information extraction or data gathering tasks. But for anything more analytically complex, it's just not enough. So you need to put in a lot more information about kind of rules, assumptions, examples, edge cases. And particularly a kind of evolution of this trend that we're seeing is particularly around context engineering, which is kind of embedding within the AI a notion of what the wider objective is that you're looking to achieve and what the role is that you're undertaking. So again, very low cost ways, but of really improving the accuracy of the results that you're able to get with AI platforms. Top tip number four, possibly the sexiest topic of the day, metadata. So, metadata fundamentally important, has been for a long time, but perhaps even more important in the AI era. So metadata, I guess, in the context of LLMs, particularly what we're talking about here is document metadata. So if you're maintaining a knowledge base of content, actually being able to understand, who's authored that document, how old it is, where it's come from, what are the topics that are being described, is really, really key. And perhaps, one of the most powerful examples of this, I think, is the ability to use metadata to even at a basic level, just distinguish between first party opinion, where a company is disclosing a fact, versus third party opinion. So what's being written about a company within the press or by analysts or other independent sources. So yeah, really using metadata as an advantage for improving the accuracy of results is key. So you can use metadata about documents to particularly kind of narrow down the scope of analysis that you're conducting, to particular time periods or particular types of disclosures. Could just be looking at corporate policies or financial disclosures, or sustainability disclosures, any type of document really. But it's very helpful as a tool for managing the size of the problem and the data set that you're analysing. And of course is very key in regulated industries. So being able to retain that provenance, being able to retain the sources that have been used in the analysis. It's all metadata, and it's all incredibly important for audit requirements and assurance and other needs. So I'll try and pick up the pace a little bit more. Top tip number 5. The market is changing incredibly quickly. New models are coming out all the time. So I think adopting data architectures that have the flexibility to be able to swap in and out models is really, really key. And many tools out there, LangChain, LangGraph, AutoGen, Llama Index, it's almost becoming a kind of commodity tool set now to be able to do that. Another thing I would say is recognizing the different performance kind of advantages of different models. You have some models that are very good at handling tables, for example, others that are very good at generating charts. Some models that are very low cost, very quick, other models that are more expensive, kind of reasoning focused models. So I think having an architecture that you can adapt and swap in and out models for different purposes is really, really key. And then top tip number 6. So again, we're very, very anti the notion of being able to kind of replace humans, particularly expert analysts and researchers from this type of analysis. Very skeptical about the possibility of kind of full black box analysis within the sustainability domain. We see huge value of retaining a human in the loop at all areas of all phases of using AI in sustainability workflows. Whether that's gathering data or conducting assessments or then analyzing the results of AI. And often it can be wrong, AI, and I think it's good to maintain a healthy skepticism of a smart human being to review these things. Also I think that's an acceptable thing for it to be wrong. It's a time saver. But there are costs of abstracting and simplifying different kind of manual processes. Moving on, top tip number 7. So staying up to date on different regulations, laws, guidance, standards, and essentially having a clear view on what good looks like. So one of the questions that we often get is, how can we use AI tools, for example, to uncover greenwashing? And I think this is where, it's important to recognize the subjectivity of the domain or the industry that we work in. and really be able to employ different techniques to be able to break down that notion of what good looks like into a set of, unambiguous kind of logical rules that can be tested. So what do we mean by this? Well, partly a key thing here is maintaining a library of up-to-date rules, regulations, standards, certifications. That can be very, very time consuming in itself. It's something that we offer as standard within the Responsible Capital platform. The other part is kind of thinking about what are the different techniques that can be used for assessing what good looks like. I guess two techniques at different ends of the spectrum that we particularly see used a lot by our clients. One is looking at kind of broad alignment to frameworks. So we see, there's lots of principles-based frameworks out there, in particular, things like UN Global Compact, SDGs, Equator Principles, UNPRI principles. And these are often, quite easy to be able to assess whether a company is broadly aligned to or not. Often it's a case of just kind of pushing in the latest version of the document into the AI model and assessing for alignment. And that's great for a lot of frameworks that are out there, but there's also a lot of frameworks that go down into much more prescriptive kind of detail and expectations around specific data points to disclose and specific conventions and methodologies to be used. And that's really where we see, particularly the value of smart human beings in terms of constructing these, very detailed prompts comes in. And a recent example there to perhaps be a little bit less abstract that we worked on. We recently did a project with TNFD where we took the TNFD framework guidance and essentially adapted that to a series of 30 to 40 prompts to identify, how many companies globally were disclosing in alignment to the TNFD standard and where the most progress was being made. So, there's different approaches there for essentially assessing what good looks like, depending on, the appetite for detail that the user has. And then moving on more quickly, top tip number 8 is don't forget your analytical tooling. So it's great having these AI tools for information acquisition and extraction, but we really are kind of turning the tap on, the hose on, the fire hose in terms of generating huge volumes of data. So then you have to think in advance about, well, what are you going to do once you've got all of that wealth of information? And I think AI, particularly commodity AI tools that we see in office applications, have a huge role to play here, but also traditional business intelligence tools and other tools, and kind of the usual human ingenuity has a huge role to play. But I think particularly thinking about that volume problem in advance is definitely a key piece of advice that we've made. And then top tip number 9 is really around just reiterating the value really of leveraging AI for solving boring, repetitive, everyday tasks that we see. So, there's lots and lots of talk in the press about, the transformative capabilities of AI to revolutionize investment processes and ESG integration. I think, there are some really exciting novel use cases that we see and we work on with clients. But actually, there's huge value in just automating, the long tail of very dull, kind of boring, everyday tasks that really none of us want to be working through, but we all have to work through to get to the kind of point of having, a reliable data set to then analyze. And we've done some really interesting work here in terms of, even doing basic things like automating gender board diversity calculations through, cycling through director biographies and things like this that traditionally we had customers, manually pulling that data together. Yeah, and then the final top tip is around governance. So making sure that you have the right governance structures and policies in place, and really thinking about energy usage, water usage. There's a lot of particularly bad press out there at the moment about the growing footprint of AI. Lots of our projects, we're kind of increasingly being asked by clients to calculate what the embedded impact is of the project. And actually we're often incredibly surprised at how low the impact is. And there's many different calculators out there available now that you can use to calculate what the water and the carbon footprint of a project is. But in almost every project that we're doing, it's a fraction of what the resources would be used by a human team. So, for example, one large scale project that we did recently, we estimated that the carbon emissions were the equivalent of a cup of coffee with milk in, and we used about 7 or 8 liters of water in a 3 week project that we estimate would have taken a human team of perhaps 3 to 4 analysts, maybe 4 months to deliver. So, it's a huge net benefit in terms of resource consumption. But I think that's something that's often lost. Yeah, and then obviously, having the right policies around responsible AI and particularly think about cyber security and data privacy risks, which are fast emerging and developing, particularly with the latest trends around AI browsers and things like indirect prompt injection risks, which we're seeing a lot in the press about this week. So yeah, governance, it's something that's probably quite boring for most AI professionals, but very important to not neglect. Yeah, and I guess the final quick plug is really around, yeah, I guess we've learned a lot of this stuff through working with clients in consultancy projects over the last couple of years. And really a lot of this has driven the development of the responsible capital platform to, build a lot of the features in to make it as easy as possible for everyday sustainability practitioners to be able to, avoid some of these pitfalls and leverage these accelerators. So, yeah, do get in touch if you're interested in testing some of the advice out today. So we're always happy to talk about what we're doing with the responsible capital platform. Yeah, and with that, I guess I'll hand back to Max. Harris.
Brilliant. Thank you very much, James. Um, Great. Well, I think that plenty of food for thought there to get us started. I'd love to hand over to Nawar and Lorraine really to dig into the first of the topics, which is let's talk about that hype and whether AI is real and the noise is justified or whether it's overrated. I'll let Nawar chime in first.
Yeah, thanks, Max, and thanks, James, for the great presentation. I think, yeah, I think this is a good place to start the panel discussion. Well, for me personally, I started my professional career during the dot-com technology boom in the late 90s. So I have seen a new technology come to life and gets really hyped. And I do think there's a big distinction between investors, for example, getting excited. And James mentioned a large short position on NVIDIA. There's a big difference around financial valuations and the future of the industry or the viability of that industry. Stock prices will go up, they'll collapse, they'll continue to appreciate again over time. In the meantime, the industry will keep moving forward. So I do think a lot of this hype will prove to be correct over a much longer time frame than investors, for example, expect and users. So money will be made and lost in the process, but this technology is here to stay, and we're building the foundation for it. My confidence that why this hype will prove to be right over the long term is I think if you leave anybody within a ChatGPT tool for 5 minutes, they'll understand that this is something that could have an incredible impact on the way they do things. I've had this experience only once in my life. That was when Google came into play, and then I found out that I could search things in a highly differentiated way. So the potential is there. But I obviously also do see a very important role for vertical AI solution providers like Neural Alpha that can take that kind of generic idea of AI, what it can do, and apply it in a very specific task and workflow in an industry or an investment. And I think that's where I find those who do their homework, they could really find higher value tasks that AI can accomplish for them. And maybe I'll pass it to Lorraine to share her thoughts.
Yeah, really glad to be here today. Thanks, James, for the presentation and Nawar for those insights. And, just thinking about, this topic that we're wrangling with today, made me remember the headline for an ESG blog post I wrote several years ago, which was, "You're already doing it." And so you're already doing some of this work. And in that context, it was talking about how a lot of these disclosures were really born out of regulatory requirements. So companies were already grappling with some of this work. And the same applies in terms of AI. And obviously today we're talking about LLMs and that's the focus. But if you think of other tools like the results on your search browser, your internet search browser, it's prioritizing AI generated content. Or if you think about facial recognition tools or text summarization. So in many facets of our professional and personal lives, we're using these tools. So I do think, going back to the question about where we are today and how it's affecting the workforce, I think we'll see a shakeout where companies are certainly reorganizing in order to make these investments. And it's painful for many. I want to acknowledge that. And I think I hadn't seen that story about the shorts, but I think the dust will settle over the next couple of years, and we'll see if those investments, if the ROI is there, and if not, different path.
Thanks both. That was really useful. I think maybe if there are any thoughts just to move us on around the difference between AI for consumers and using ChatGPT to plan holidays and travel versus in the enterprise. There are any different kind of archetypes that you're seeing emerging, different challenges along the way. I think one of the obvious ones is that the adoption cycle is slower for enterprise than consumer. But love any thoughts from the panel on that before we go deeper.
I can jump in quickly by saying I think there's a big distinction between doing mission critical tasks on AI and planning your holidays. I don't know whether maybe it's mission critical for you, but I think there are certain tasks that you can't get wrong. If you're an investor, you need reliable data. If you are assessing your suppliers, you really need to understand what's going on in terms of whether there's reliability there's risk. And across the spectrum of business and industrial applications. So the bar is much higher for enterprise grade and investor grade in terms of the reliability of the output. While I think for everyday users, they can tolerate things that might not be 100% right or directionally right. But there's obviously, that's really what a lot of AI investments are about, like getting to that reliability at the enterprise level, which I can't speak to how long before we get there. Maybe James or Lorraine can speak to that, but I see that as the distinction.
Yeah, I would just add, general solutions are great for those quick and easy tasks. And I think James really covered this well when talking about customization and having documents from your enterprise available and searchable and having the right protections in place for those documents. So just wanted to add those couple of ideas to the conversation.
Yeah, brilliant. I think that where the data comes from is a key part of it as well. Great points both. I'd love to dive a bit more into that topic of AI for enterprise and explore a little bit more about what we're seeing, particularly around the application of AI for corporate sustainability and for sustainable finance and more broadly ESG and financial services. Lorraine, would you like to pick that one up?
Sure. We see a lot of sustainability practitioners starting to look to AI to help with productivity, help with analysis, and other use cases. One of the use cases I hear quite often is looking across the supply chain for solutions there. Think about the amounts of data that are needed in order to do that, or in other cases, the amount of standardization needed in order to make comparisons. So that's an example. Looking at publicly available data, say sustainability commitments, is another use case. So, what has the company publicly shared about their goals? So, those are a few examples that are pretty popular in terms of today's use cases.
Brilliant. Noah, I'd love to hear your thoughts on this. I know you've been at the forefront of this on both sides, the corporate and the financial side.
Um, yeah, I mean, I have been, but I can tell you that Deloitte is even more involved in this than myself. So I'm just gonna cite one of their latest surveys on just the state of sustainability, and there was a section on AI, and I was really maybe surprised to see that 81% of 2,100 executives in 27 countries said that they're using AI for sustainability purposes, and 16% will plan to use it next year. So, I mean, we're virtually at 100% AI usage. In terms of use cases that were identified as frequent, 65% indicated, which was the higher kind of commonality, said that they're using AI to find efficiencies and reduce operational emissions. Um, I find that specific usage very interesting because that's a dual usage. It's a business saving opportunity when we talk about efficiencies, but it's also a sustainability benefit. So I think also the line do blur a little bit when we talk about using AI for sustainability, because sustainability happens within a business, not, you know, something else happening in a silo. So to the extent we're using AI more efficiently across a lot of operations, we're also saving energy. The way James explained it, and a task that may take a bunch of people a few months, if you can do it in a week, you're saving a lot of resources. Do you qualify that as a sustainability win or as a business efficiency win? That may be just a language classification. Other uses that were mentioned: 58% use AI to monitor data and metrics for reporting. I think that's where areas like benchmarking comes in, where Neural Alpha and Responsible Capital excel, and that's an incredible time saver. And you can and benchmarking, by the way, it's something that applies both to investors, to corporates, to the the business world cannot operate without benchmarking. Everybody's benchmarking against everybody. Investors are constantly benchmarking against an index, against their peers. It's all relative. So this is not just a side thing. That's critically important utility. Other areas that were mentioned, briefly mentioned, 53% use AI for risk mitigation, using it, for example, for scenario planning, and 52% use it to develop new sustainable products and services.
That's great. I'll throw in a few more. I've seen a lot of companies talking about in detail their use of AI for demand forecasting, predictive energy management. If we're talking again about supply chains, logistics optimization, and then I'll just say general use of resources. Water could be one of those.
Great. Definitely a good number of emerging use cases for applying AI, both around driving value and on that efficiency side there. I think it'd be great to deep dive a little bit more into the corporate sustainability side. If we could just dig in a bit more for that one. I'll put that question out there to the three of you. To share a little bit more about how is AI driving ability to do things that corporate sustainability teams couldn't do before due to technical constraints or bandwidth, and where are we seeing impact and activation on the efficiency and cost saving side.
I can go first. I'd say I'll start us off with sort of the simpler applications. It might be structuring large amounts of data. So that is something that, I'm always talking at different business schools about the importance of being comfortable working with data if you are a sustainability practitioner. And so I say analyzing vast amounts of data is time consuming. And so bringing in the right tools to do that can certainly help. Nawar talked about benchmarking. That's near and dear to me. But you have to have good, clean data in order to do that. And so that's another part of it. I mean, I know a lot of people are using AI to produce a first draft. So say, summarize. Typically sustainability practitioners are charged with not only gathering the data, interpreting it, but also producing some sort of report. And even, another stage beyond that would be asking the right questions. So working with the data and generating prompts, say, if you're working with a set of portfolio companies, areas where you can engage and look for improvements once you've handled those other tasks.
I think here it's useful to cite this MIT paper that was published in July about the state of AI in business, where there's this number now we see often that 95% of Gen AI pilots were, not generating a return. But when you look at specifically the 5% that are generating a return, I think that can be replicated. But the way they are generating return is they're targeting very high value narrow case use cases. James touched on this in his presentation. In order to do that, you really got to understand your workflow, and you have to understand where AI comes in and where the employee comes in or the human comes in, and then when you hand it back to AI, if you in a way do a bit of a kind of dumb and try to get AI to do everything, you end up with a failure. One of the challenges about applying AI in corporates, at least according to that paper, is that a lot of the focus has been on sales and marketing. In part because you can measure that easily, how many demos you got, how many sales you've done. I mean, you quantify that. Sometimes the time savings, because you've saved time, it's hard to know where that free time or additional time that's been generated as a result is going and whether it's flowing to the bottom line. So a lot of companies measure things by bottom line. I mean, is this cutting costs or it is increasing revenues or sales? So I do think, I mean, long story short, you really got to dissect the workflow, understand which tool is best for what, and start generally most successful trials started from the periphery. Maybe you're doing analysis of your suppliers, and one tool does it well and does it often, and then maybe you go one step further, say maybe I'll use it to project supplies or engage with suppliers in a different way. So something not very ambitious but gradual, targeted, well thought, deliberate is going to yield great results with the right tool and partners.
Great. James, we haven't heard from you for a while. Love to get your thoughts on some of the work you've been leading with some major corporations around the world.
Yeah, I think it's really, really interesting the potential of AI to really transform, how supply chain professionals are working and also in other areas like competitor benchmarking, I think there's some really interesting things that we see, particularly with people that we're working with. I guess one of the immediate things is just the optionality that you get from the time savings with AI. So, whether you're examining a company from a supplier perspective or a competitor's sustainability profile, I mean, generally talking to sustainability professionals, we've been told it's typically 3 to 5 days to kind of create a view on a company, to read through all of the relevant sustainability disclosures, policies, framework disclosures, key financial disclosures. So, with AI, you can get that down to a few hours. So suddenly, you can completely transform your approach, for example, from say adopting a sample-based approach or a risk-based approach for examining your supply chain to actually systematically analyzing, every supplier's kind of positions or disclosures, certifications against your own kind of internal standards, supplier expectations, regulatory standards, and so on. So, you look at companies like, Nestle is one of the ones that we often quote, where I think they have 165,000 direct suppliers, and, many hundreds of thousands of indirect suppliers. So suddenly with AI, you can perform that level of analysis of your supply chain, which just wasn't really possible before. So I think that's one really interesting thing. And of course, it's, that's analogous to how large diversified financial institutions are working as well and some of the problems that they have. I think the peer analysis area is really interesting as well because, AI can help in lots of different ways. And, even identifying what a relevant peer group is not an easy thing for many companies. So, AI has a really strong role to play there. But also in terms of, doing broader benchmarking against kind of, sector level information, but also looking at, kind of topical benchmarking. So one thing that we often see with, clients is, they don't have a lot of direct competitors to benchmark against. But with the objectives that they have, there are companies in other industries that normally they wouldn't benchmark against that suddenly you can identify and do very kind of rapid analysis using AI. So I think we had the example recently, we were looking at, I think it was, an automobile recovery company that were looking at fleet electrification. And there's not a huge amount necessarily going on in that industry in certain countries, but there is a lot going on in grocery deliveries around fleet electrification. So suddenly, you can do that kind of very agile benchmarking, really, really quickly. So, yeah, I think it's really exciting times for this technology, to be honest.
I plus one to what James has said. And over the course of my career, I've had countless conversations with companies who really struggle with identifying themselves, like which GICS category or six am I? And you've really nailed it just in terms of talking about widening the aperture and thinking about other companies that you should benchmark against. And just to share, a little bit beyond that, even large publicly traded companies like an Amazon, Scott Galloway from NYU has said, actually, they're playing in all of these many industries, everything from commercial shipping to, the store that you're accessing through an app. So just wanted to add that info. Yeah.
Yeah, phenomenal. One of the things that large language models are best at is looking for statistical similarity in qualitative data. And that's just the foundation of what you're both talking about there. So a brilliant use case, an example. So I think all of us here have actually done a lot of our work in and with the financial services industry, where sustainability and of course ESG sort of look a little bit different, more complex in some ways, more rigid in others. Yeah, love to move the conversation on to how AI opportunities and adoptions are taking shape within the finance industry. Maybe Nawar, we'll start with you on this one.
So the way I think about the financial industry and the way it creates value is very simple. The financial industry needs two things to deliver value. It needs data. It needs a lot of data, and it needs capabilities and superior capabilities to analyze this data. And entities that have the capabilities to distill, dissect, isolate, understand where the opportunities are, where the risks are, where they have been, where are they going, are going to have an edge. That's really what most industry professionals do. They used to do it by hiring an army of analysts. Now you can maybe have a swarm of AI tools trying to analyze all these data sources for you and identifying new data sources. But it's all about having that edge. This is an information management industry, and I mean, there's a lot of criticism that financial industry doesn't create anything. We're just kind of moving money around and moving bits and data around. But if that's the currency of this industry, AI is built for it. So I've used it personally. Although I'm not managing money professionally as I used to, I'm still managing my personal portfolio. And now I have an analyst that I don't pay, which are the AI tools I use. Either it's ChatGPT or Neural Alpha or RC in specific cases when I'm looking for certain comparisons and benchmarks. And that's where AI is going to create value. It's not just the efficiencies of doing the same thing. It's the ability to do other things that you are not able to do as well. So I'm personally very excited about this. The only thing I cannot tell is whether ultimately AI is going to replace a lot of financial professionals, whether a lot of this could be done in an automated way, but that's a different discussion.
Brilliant. I think we'll probably do our best to avoid talking about the 300 investment bankers that OpenAI are in the process of hiring at the moment to train the models. I'll pass on to Lorraine next, perhaps.
Sure, that's a great segue, where it looks like we will be all masters of building these models, depending on who they bring in. Other use cases, we already have the chatbots that are powered by AI. So all of us interacting with our financial institutions are in some ways using that technology. Another application is training. And then to add a third, I'd say fraud detection. Yeah.
Brilliant. James, do you want to chime in here with a bit about some of the work that you've done in the industry? I know it goes back over many years, but I think there's probably a few good examples of use cases that you can share.
Sorry, in terms of use cases for AI, yeah, I guess I think maybe one quick comment I would share is I think one of the things that I find really interesting is I've worked in the financial industry for a long time, hedge funds and long only asset managers and in investment banking, and I guess anyone that's worked in the industry for long enough probably has a healthy level of skepticism about some of the things that the industry says versus some of the things that it does, particularly in sustainability. And I think, you see this or you have seen this very interesting trend historically where supposedly every financial institution has had their own proprietary sustainability framework, using their own internal research. And then they all go and buy the same data set from the same big providers. So there's kind of this internal contradiction. And I think AI is really set to transform that and, deliver a whole level of kind of bespoke ability and detail that the industry is not really used to because it's a very kind of herd driven industry. People follow trends. You don't tend to see, people necessarily blazing trails in different directions. So I think AI has a really interesting role to play there. So particularly looking at things like values based investing and being able to do that at scale and deliver, really personalized, responsible investments. Being able to truly demonstrate at scale that you are able to actually implement a proprietary ESG integration approach. I think that's really, really interesting. And I think we're just starting to see large financial institutions using AI to achieve some of those objectives. So yeah, that's something that I'm quite excited about with the work that we're doing.
Me too. And I would add just, because it's such a broad space, the financial services industry, just, from my corner, having all this experience in the private markets, I'd say a few years ago, there was an aversion to bringing on these AI tools, thinking about personally identifiable information, thinking about the fact that a lot of this data is confidential, not disclosed elsewhere. And I'd say the pendulum has swung the other way once now that we know the power of the tools and don't have to rely on these general use offerings and can put guardrails in place for that particular financial institution itself.
Yeah, that's a brilliant point. Thank you to all of you. Conscious of time, let's try and do a couple of minutes, just wrapping with some key takeaway do's and don'ts from each of the panelists, and then we'll pick up any questions in the chat from the attendees right after that. Nawar, would you like to kick us off again?
Yeah, since we only have 2 minutes, I guess I'll keep it brief. I basically will use the Russian proverb, trust but verify, when it comes to Gen AI, specifically when you're working with kind of mainstream Gen AI models. If you're not working with a vertical, specialized, trained, guardrailed provider like Responsible Capital, you really have to emphasize the verify. And understand which model, which solution is best for which task you're doing. We talk about Gen AI. There are multiple versions doing multiple things, growing in different directions. To go back to James' analogy about AI being a junior analyst, well, if you have a team of 10 analysts, they all have different strengths and weaknesses, and you have to understand whom you should work with for what task, and you should approach AI with that similar mentality. It's that distinction and doing the work and understanding where the strengths and weaknesses are will help you use the right tool for the right task.
Lorraine, let's go to you next.
So best advice here, closing thoughts. I would say I really appreciate the resources put out by groups like the UN Global Compact and Humanity AI, and they're essentially just encouraging a multi-stakeholder approach to using these solutions. And within an individual company, my version of that would be the sustainability professionals being in the room when these solutions are being built, when the documents are being uploaded, and so on.
Brilliant. James, would you like to close us with your key thoughts on do's and don'ts? I'll let you do just one because you've already had the opportunity to cover 10 in your presentation.
Yeah, I won't try and cover all 10 again in 30 seconds, but yeah, I guess kind of final thoughts from me. I think one is just being open-minded, really, because it's an incredibly fast-moving space, and I think even in the 2 years that we've been working with kind of Gen AI and large language models, the difference is really kind of night and day. I think now in terms of the quality of the analysis that they're able to produce, and there are still some limitations, but there's ways of working around those. Yeah, and I think just breaking the problem down and being very pragmatic, and I think using good old common sense. To be honest, I think that's been a particular kind of source of value for us, and that really comes from kind of human ingenuity and experience, I guess. So there will, in our view, always be a role for the expert human, in the loop with these AI systems. So. Yeah, don't go laying off half your ESG team yet. There's still value to scaling it with AI. So,
Brilliant. Good news for all the human attendees on the call, and we will be distributing a recording for those that couldn't make it today. just a closing thought really is that I think all of the people on the webinar here, are open to continuing the conversation, one to one or in groups with anybody who's interested to dive deeper into these topics. And the best way of contacting all of us is probably through LinkedIn. So very much look forward to hearing from the attendees and getting feedback from the audience. So thank you, everyone, and wish you all a good day.